Developers are not incentivized to take over your unit that you've defaulted because by law they have to refund you a portion of that. You have a $4 million asset and then you're paying $1,000 a year in property taxes.
Right.
$1,000 a year on a $4 million
Extremely low,
asset.
yeah.
Every Filipino that was wealthy or any Filipino will convert their money to dollars.
Right.
And that's why there's always this constant exodus of money.
Right.
That's why there's always, 50, 52, 53, 56. But
now
then
that
after 28, it moved from 56 to
I
41.
remember that, yeah,
It's like,
yeah,
and it wasn't like a blip. It was like over a good run, you know?
and then they ended up buying a bunch of assets here.
Yeah. So the best, just like what we're seeing in Japan now, or maybe you come in at 56, you sell your asset at 41, then you make a double whammy income
Exactly.
where one is tax free because it's
What?
all currency.
Yeah.
So before, when you made money, regardless of source, you will convert it to dollars, give it to your banker, and the banker say, "Thank you very much. Let's ship it to Switzerland, to the US." With AMLA, you couldn't do that anymore. So the exit got shut. So all the money's trapped here.
That makes so much sense now.
So how much does the Philippine government spend in a year? Today, it is 5 trillion pesos. Government spending, huh? Not borrowings.
Right.
This is just money from government pocket out.
This is not pocketed money. This is actual spent money.
On salaries, on infrastructure, on whatever. Toilet paper, on office rent, all that. The budget of the government is 5 trillion pesos. So just imagine how much of that is lost, siphoned out of government projects into the pockets of people.
I don't know the exact percentage, but the general thinking is quite a lot, right?
Let's pretend it's 30%.
Okay.
So 5 trillion, 30% of that is 1.5 trillion pesos. And then how many elected positions are there in the Philippines? 19,200.
Right.
You divide 1.5 trillion by 19,200. I don't know what that number is. It's too big for my brain. But per capita, assuming you distribute all that equally, that's kind of a hefty chunk of budget that you can only buy so much Louis Vuittons and fancy shoes for your girlfriend. At the end of that, the biggest chunk of moving that money is into real estate.
You're the first one who's ever really explained to me in details where I can understand why there's been such a long bull run in the Philippines. And thank you for that.
Counter-cyclical.
Right.
It's counter-cyclical. Yeah.
But are we on the cusp of a correction? Because I can't help but see that everything is pointing towards that. Where's the liquidity going to come from? Where's the money coming from?
The debt levels are too low. Now, what's happening in the mid space? A lot of the middle market aspire
80% default, like you said.
in the last 2 years, okay? Across all brands, no exception. In the high end, very different story. The default rates are negligible.
Right.
And they would be happy to take the asset back because they'll flip it at 50% premium.
They're paying it cash anyways.
So the middle market lost their jobs, victims to inflation. The price of like a cup of rice then in 2 years, 3 years became so different, times everything, fuel, all that. So that really wore them out. The low end of the market have the overseas remittances to protect them and save them.
Right.
The high end have savings and low debt.
Right.
The middle end is the meat in the sandwich. They're the ones who got eaten by inflation, high interest rates, their loans kicked up for repricing, and bang, they got hit.
Right.
Fortunately, in the Philippines, which is again something that people don't appreciate, interest rates here moved from 5-6% to 9%.
Right. Yeah.
That's nothing. You compare that to like so many people in the US who got repriced from 1.7% to 6.
Yeah. That's much bigger impact on your payments.
You look at Singapore, where interest rates went from 2% to 9%.
Right. You have to think the middle market crashing is going to drag
not
the
crashing,
other.
not crashing. It's not crashing.
Okay. What would you call it? A correction? If you're talking about 80% default, first of all, what percentage of the middle market is financed?
A lot. And so all the companies do, all the conglos do is foreclose. So there's this thing called Masada, I think it's Masada law. The Masada law, where they have to refund to you a portion of your payments.
Oh, really?
Yeah. If you default and you've been paying for more than 2 years, you have to pay a certain percentage. Now, please forgive me for not having it off the top of my head what those
Right.
things are, but there is a law that protects people from that. So it's developers are not incentivized to take over your unit that you've defaulted because by law they have to refund you a portion of that. Okay?
So it's the developers that are
The
paying this
deve-
back, not the bank.
Hmm?
Not the banks. The developers are paying back a portion
Mm.
of the default.
Oh, the default, yeah. Okay. So
Do you know what that portion might be? I'm curious.
it could be as high as 50% of what you've paid for.
Wow.
Yeah. So as a person who is defaulting on payments, you actually have at least a 50% recovery. Yeah. So that's your safety net.
Okay.
You're not going to get everything back. You got to
Right.
be fair
Right.
to the guy who built the building,
Right. Right.
you know, but at least you get half back. And what does the developer do? Well, okay, I have enough of my balance sheet because my borrowings have been low because they've been very disciplined. They've been transparent. They'll absorb the hit. And what are they doing now? They're trying to dump it, or not, sorry, dump it is too harsh for a word, but they're reselling these assets right now for rent to own schemes, right?
Right.
Which,
So
why would you not take advantage of
of
that?
course the rent to
Oh
own
my
schemes,
God.
but I haven't seen like a true rent to own yet. Well, I'll get that. I'll get into that. But
But the terms are so much better.
yeah.
So much
Right.
better.
Right.
And how many times in the last 20 years or even 30 years are developers put in a situation like this?
I would imagine quite a lot. No?
Very few times.
So
Because
this is unprecedented. Like this default rate wasn't happening before.
yes, but it's coming at I'm not saying that every condo unit owner has defaulted on the rate, okay? The people who bought in the last 2 years,
Mm-hmm.
or the people who bought place in the last 3, 4 years, defaulted on their payments in the last two. Okay. While that number sounds big, you're not talking about, in absolute terms, you're not talking about a big chunk of the market because you're only talking about a fraction of the buyers that have happened in the last 3, 4, 5 years.
Right. Right.
But from a developer's perspective, it's like, wow, this has never happened before at these levels.
right.
It's normal to have some attrition
Uh-huh.
and you can absorb that easily. But now, in order to cover for that,
But doesn't the buyers prior to that, they're still on what, a 10-year, 15-year term? They're
oh no,
experiencing
no, no, we're so these are all pre-selling. I'm talking about the pre-selling market.
Oh, okay.
The
So you're
pre-selling
saying
market.
80% default on the pre-selling, not
Not
after it's been
not
turned over.
not after it's been turned
Okay,
over.
so when you say default, you're not talking about bank financing.
Yeah, I'm sorry. So yes, the developers who are pre-selling their units
Okay.
experience a 80% default
Okay.
in the buyers of condos.
That makes sense because they haven't turned over the property. Sure,
Yeah.
they should refund
Yeah.
back some of the money.
Yeah.
And then they can resell it at full price if they wanted to, if they could.
Yeah. If
Right.
they can.
Right.
If they can. Now,
What about the default rates on the
in the
banks?
bank? In the bank,
financing?
it's been going up, but the absolute percentage of that is still fairly low. It's like 3%, 4%. It's not at alarming levels
Why is this so low?
because people are really afraid to borrow.
So the ones that do borrow are really committed to it.
Yeah. Well, committed to it.
I mean, so what is the reason why? I mean, that's surprisingly low considering everything that's going on.
Because there are so many avenues for safety nets, for alternative financing, either because they got this government subsidy or their relative from abroad is coming in to save them. There's so many avenues for because
It's all through family
because the
connection, right?
family network is so big,
Right.
regardless of the strata of where you are in the ladder, they're able to find ways to get funding.
Because I'd be surprised. I mean, I've never heard of any government
There's
substitutes
also-
in the Philippines that actually help.
Well, you have Ayuda that came in, Ayuda for, and then you have during COVID and the lockdowns, the banks were compelled to stretch the payments for defaulting
Right. Okay.
borrowers. Then you cannot discount this small part of the market that addresses a big chunk of this mid-end market, which is the girlfriend market. So yeah, and then the other.
Do you want to?
thing-
Do you want to?
No, no.
Do you want to?
No, it's okay.
I don't know
It's
what
okay.
you mean.
I'm gonna get bashed even more. The other thing by people who I may or may not know, and then the other part here is the lost my train of thought.
I'm so curious about this girlfriend.
Yeah. So yeah, going back to Philippines, that's why I think there's quite a bit of there's a support level that's actually quite high and credible. The only way it will take quite a bit of a crisis, a really massive crisis, to kind of to change that.
Right.
One is, I think, if we found out that the biggest companies here are lying about their balance sheet
Mm-hmm.
figures,
Mm-hmm.
their P&L, which I really doubt. I
Mm-hmm.
can't imagine Ayala or SM or the Gokongwei is doing that. So there's got to be a massive political instability, which is not happening. Despite all the noise
Mm-hmm.
today, no way. Um, the only risk I would see would be climate change risk. One massive storm that hits Manila and decimates Manila.
So it's still a stable market.
Still a stable market. Yeah.
Right.
You
So
look at the high end. I mean, despite everything that we've been through, my God, I mean, prices in Forbes Park continue to climb 2 to 5% a year, despite
right.
lockdowns, COVID.
Right.
You're a business owner.
Mm-hmm.
You're a big business owner to be able to afford a 1 billion peso home,
Mm-hmm.
right? And all your businesses got shut down during COVID,
Mm-hmm.
despite how diversified you are, and you're
Mm-hmm.
still able to buy Forbes Park for cash,
Yeah. Yeah. No, this
right?
country definitely is not a poor
So
country.
and it's not just in Forest Park. It's Ayala Alabang, which is
Yeah.
rich also, but not Forbes rich.
Right.
New Valley,
Yeah.
or Hillside or whatever. It's see it all over. Situation to
No,
me,
that actually
right?
sounds like very much like the residential market too. No.
Strong-handed is the
Right.
term.
Right. So the residential market is similar, right? What do
So
you think is the residential vacancy rates?
it depends because I think in the high end, the market vacancy there is high. But then if you own 10 apartments and one's vacant for 10 years, who
You don't
cares?
care because you're
Right?
all cash
And it's
spot
like,
anyways.
you inherited this thing from your dad or your grandfather.
Yeah.
Your cost of acquiring is zero,
Right.
right? And you just, okay, you pay the juice, and the juice are like,
Yeah.
stupidly low.
And then your property taxes aren't
Property
insane, right?
taxes, it's like, you have a $4 million asset, and then you're paying $1,000 a year in property taxes.
Right.
$1,000 a
Right.
year on a
That's
$4 million
extremely low.
asset.
Yeah. Is it really that low?
It's low.
Is that the average? That seems a little
It's
low.
not. Well,
$4 million
it's
at
pro
that.
rata, pro rata.
Okay.
Meaning, if you own the condo,
Uh-huh.
that proportion is probably similar.
Okay. Right. Huh. Residential rates, similar behavior. People are just going to hold on to their properties, and they're not going to drop their rental rates too much.
Some have, like especially in the middle market.
Mm-hmm.
From the studio unit, like used to lease out at 30,000 pesos. Now for rent at 10,000 pesos.
Yeah.
That's great.
Yeah.
Why wouldn't you? So, before the the Pogo market was here, the locals were all saying, oh, you prices out. Okay, well, now that they're gone, what are you waiting for?
Yeah.
They're still not taking it.
Right.
I mean, you had every opportunity as a local to buy as many assets as you want, even before the Pogos were here. Were you buying assets? No. What are you talking about then?
Yeah.
It's that is funny
Yeah.
sometimes. So I'm not now saying there are no distressed deals. There are very few distressed deals.
Well, this is where I want to get to because I've been investing in real estate, and it's always been a bull run everywhere in the world. I've been holding my breath for corrections, even a crash, for opportunities, right? Because that's where you want to take advantage of those opportunities, right?
But what you and I couldn't predict is the amount of QE that offsets all rationality.
Right.
You and I,
especially during COVID.
Yeah. You and I
Right?
are calling it right. But
Right.
then this black swan offset by a white swan, which is what? QE.
Right.
So, the market buys another 2 years.
Just too much money in the world.
You're just kicking the can down.
Right.
Yeah.
But it's going to happen eventually.
Who knows?